Today, we're exploring the classic double top and double bottom strategy with a twist, using a free TradingView indicator to spot trend reversals accurately. Stick around to the end, and if you find this helpful, please like and subscribe. Let's dive in. To set up this strategy, the first thing you need to do is open TradingView. Once you're there, set your chart to the GBP/USD pair, and then adjust the time frame to 1 hour. This time frame is ideal for capturing meaningful price movements without the noise of lower time frames. Next, go to the Indicator Search tab. In the search bar, type double top bottom. You'll want to select the double top bottom indicator by Scalping. This indicator will automatically identify when a double top or double bottom pattern forms on the chart, making it much easier to spot these potential reversal points. Now, let's customize this indicator to make it more effective for our strategy. In the Input tab, you can leave the settings at their default values. These settings are optimized for detecting the patterns we're interested in, so there's no need to make changes here. Next, go to the Style tab. To keep your chart clean and focused, remove all the marks except for the labels and lines. This will make it easier to identify the patterns without unnecessary distractions. Once you've made these adjustments, click OK to save your settings. The double top bottom indicator will now help you identify key reversal points. If the indicator signals a double bottom, this suggests that the price has likely hit a support level and is poised to reverse upwards, making it a good opportunity to place a buy order. Conversely, if the indicator signals a double top, it indicates that the price has likely hit a resistance level and is set to reverse downwards. Go back to the Indicator Search tab, and this time type NJ Volume. Select the NJ Volume indicator created by NJ_trader. This volume indicator will be crucial for determining the strength of the market momentum during the potential reversal. For the NJ volume indicator, you can leave the default settings as they are optimized for our needs. Here's how this indicator works. The blue cloud represents the volume moving average, volume MA. A green volume bar closing above the volume MA cloud indicates strong bullish volume, signaling that buyers are stepping in with force. A red volume bar closing below the volume MA cloud indicates strong bearish volume, signaling that sellers are dominating the market. Let's walk through the steps for placing a sell order using this strategy. Identify the double top. The first step is to wait for the double top bottom indicator to signal a double top formation. This suggests that the price has reached a resistance level that it is struggling to break through. Check volume confirmation. Once the double top is signaled, look at the NJ volume indicator for confirmation. You want to see a red bar closing below the volume MA cloud. This tells you that the sellers are in control, increasing the likelihood of a downward price move. Confirm with candlestick. Make sure the candlestick that forms after the double top and volume confirmation is bearish, a candlestick with a close lower than its open. This is your final confirmation that the price is likely to reverse. Place the sell order. If all conditions are met, place your sell order right after the bearish candlestick closes. Set stop loss. Position your stop loss just above the highest point of the double top. This protects your trade in case the market unexpectedly reverses again. Set take profit. Use a risk-to-reward ratio of 1 to 1.5 for your take profit. This means if your stop loss is 10 pips above your entry, your take profit should be set 15 pips below your entry. This ratio helps ensure that your profitable trades outweigh the losses. Now, let's go through the steps for placing a buy order. Identify the double bottom. Wait for the double top bottom indicator to signal a double bottom formation. This suggests that the price has reached a support level that it is struggling to break below. Check volume confirmation. Once the double bottom is signaled, check the NJ volume indicator. You want to see a green bar closing above the volume MA cloud. This indicates strong buying momentum, suggesting that the price is likely to move upwards. Confirm with candlestick. Ensure the candlestick that forms after the double bottom and volume confirmation is bullish, a candlestick with a close higher than its open. This candlestick provides the final confirmation for entering the trade. Place the buy order. If all conditions are satisfied, place your buy order right after the bullish candlestick closes. Set stop loss. Position your stop loss just below the lowest point of the double bottom. This limits your risk if the trade goes against you. Set take profit. Again, use a risk-to-reward ratio of 1 to 1.5 for your take profit. For instance, if your stop loss is 10 pips below your entry, your take profit should be set 15 pips above your entry. This strategy helps maximize profits while controlling risk. That's all for today's video. If you found this strategy helpful, please give us a thumbs up and subscribe. Thanks for watching, and we'll see you in the next video.